Hey everyone, another session today. We're going to go over life insurance. So we're going to talk about the different types of policies that there are and what type of scenario you may need this type of policy, and also just kind of going in depth. That way you have an idea and you can make a decision, an educated decision based on not just financial situation, but also based on your age. Please keep in mind too, we do have a guest here, Isaiah. He's president of the Mogul Network, who the network is helping us out a lot. Big shout out to them. If you're not following them, please follow at MMPN.
Yeah, 3 underscores at MMPN underscore. I'm sure it'll go on screen.
Yeah, for sure. Yeah, so he'll be asking some questions and giving some scenarios just so you have an idea of how the policies work. Or maybe if you have any additional questions, you can feel free to comment about that as well. So let's jump into it. We'll go over the term. I'll go over term and whole life. Those are the two that we're going to go over. Your term insurance, basically it goes with the name. It means that that policy will run for a certain amount of time for that term, and that price won't change in that term. So what they do for life insurance policy, they base it on your age, and a lot of companies also base it on the physical condition that you're in, right? So they do an exam, and they figure, you're in good health. They give you a price. This price could be as low as $12 a month, and they give you a 20-year term with this $12 a month. So that means that price will not change for those 20 years. It will stay at $12 a month. But after 20 years, if you haven't looked into another policy or converted that policy, the price could double, triple, go 4 times, 5 times, even 20 times as much as what you originally had it at. So, keep that in mind depending on where you are in life. The difference could be exponential if you don't convert the policy or if you don't look into a policy before that term is up, right? Depending on what condition you're in.
I understand that, finance management and things at a foundational level. Now, when it gets to insurance and things like that, I know for the most part I'm not going to want to spend the money. But in the long run, just in case anything happens, It can be good to have these types of policies. I just don't know what's a necessity and what's filler.
Yeah.
I don't know the differences there. What do I need to have versus what options are there?
Yeah, for sure. So a lot of times it's all based on the situation that you're in and what is it that you're looking to protect, if you're looking to protect anything.
Say
right?
I got 2 kids.
So you have 2 kids. You're in a position where you're worried about school, right? So they're going to go to college. And you say, okay, my kids are going to college at the age of 18, so I want to make sure college is covered, and I want to make sure that we don't have to worry about, the dorm. We don't have to worry about having a car if you need a car. So I figure, man, I need at least $1 million a pop. You know what I mean?
By the time our kids are going to college, probably.
Probably, right? So at that point, all right, so you can get a term policy, because it's more coverage for less price. That's why it's a term. So that's what's good about term insurance, is you're going to get a lot more coverage for a very low premium. So we're talking about you could get, your age, you can get $1 million in coverage, and it's going to cost you anywhere between $35 to $50 a month. So in that instance, that's what you want to look for, because that's the case. That's the situation that you're in. Right. But let's say you don't have kids. You just have you have a home.
Young and wild and free.
Yeah, young, wild, free. You got yourself a home. I don't know. You have a wife. You have. I'm sure you have family members, maybe, and something happens where you're in debt now. You have this debt that's tied to you.
Student loan debt.
Student loan debt. You have the vehicle that you purchased. You have medical debt. You have this home that you purchased. You might want to get a term to cover you for the amount that the loan is for. So let's say you have a 20-year mortgage. What you would want to do is get yourself a 20-year term policy that will cover you for that 20-year mortgage, right?
And then what happens at the end of the 20? Do you reassess?
Well, at the end of the 20 years, if you don't review your policy beforehand, like I said, the premiums could go up exponentially.
Can I cash out?
Not on a term policy unless you get a return of premium waiver. So certain policies give you return of premium where at the end of the term, they'll give you a return of premium. They'll give you your money. They'll give you your money back. Nothing happens in those 20 years. Everything that you paid into, they'll give you the money.
Just everything you paid?
Everything
with
you paid.
Interest?
Not with without
Okay.
interest. But
So
there's policies that do give you interest. That's whole life, which we'll touch on that one next. But for term policies, it's more like, I need a lot of cash in case something happens
Right.
to me within this amount of time.
Right.
Right? That's how you want to think about it.
So for
more than
the
anything else.
young guys who may be living the street life in Chicago.
Yeah. I mean, sometimes they say, like you have a career of street violence or whatever. I mean, we live in a city.
These guys
and
in these street fraternities.
Yeah, I mean, these guys are out here from ages, sometimes, I feel like they get younger every year, but sometimes from age 12, let's say from age 12 all the way to age, 35.
Right. In the streets.
In the streets. So, you could get yourself a 30-year term policy that protects you for that term so you can leave money behind for anyone that you care about. But at least you're covered in that term.
At least you're not sending your loved ones into debt.
That's the worst thing, because I noticed that when someone passes away, they don't have anything in place. Everyone's doing something to collect money, and it's a difficult situation. I've seen a lot of people in it, and I think it's important to just consider, even if it's a term, get a term. Now, certain policies you asked, you asked if you could convert it. Mm-hmm. So a term policy, you can actually convert it into a whole life, depending on the company that you have the insurance with. So at Winmore, we have carriers that allow you to convert this term policy into a whole life, no matter when you are in the term. You could be at year 19, and you could convert it to a whole life,
right.
Which means that it'll last you for the rest of your life. So I've had cases where you said there's individuals, foreigners that don't have, I come from a family of immigrants and they don't have a social security number,
right.
Or you don't even have an ID. You just have like whatever you used where you lived before.
Right.
So in that case, if you're working here, companies understand that you're going to be here for a while, so they'll sell you life insurance, and protect you in case anything happens to you. So that's something to keep in mind too. And life insurance protects you no matter, if you pass away even outside of the country, So that's something, for a lot of people, they say, well, what if I retire, or I'm at a point where I'm thinking about retiring to another country, I don't need life insurance. Mm-hmm. Well, it goes with you, so if something happens to you, all they need is the death certificate, and once they get that, they process everything, and you get a check for the amount that you're insured, that you get that you're insured for. Next topic is the whole life, which there's a lot of questions that you were kind of mentioning that touches on whole life that I think people should know. Whole life, it goes with the name, whole life. Whole life protects you if anything happens to you. Same thing as your life insurance. If there's a death, they'll give you the death benefit. But with whole life, there's options where you could actually have cash value in a whole life policy. So depending on the carrier, you can pay into this policy, and what would happen is it starts accumulating funds, and you can take this money out tax-free. So that's something to think about for whole life if you haven't heard of that. So depending on what your death benefit is going to depend on how much you pay monthly, and also depending on your health, same as the term. So if you're in great shape, young age, it's a great time to do it because prices will be low. You could get a high death benefit for a low price and pay into this policy, and in 10 years you have a certain amount saved up that you could grab and either cash out on and not return, or you can just cash out, you could pay it back. It's ultimately up to you, and they don't charge you on taxes for that.
Rough estimate, what would be the difference in me getting my life insurance whole or term now as opposed to, I don't know, when I'm 40? Another 12 years.
Man, I think the price could be triple.
Okay, so
Yeah.
I could go from 50 a month to 150 a month.
Easy.
Okay.
Yeah, easily.
Or, a lot more.
Or more, yeah, or more, depending on what position you're in. Because, like, let's say you're diabetic, but you find out, hey, he's diabetic by that time, or you find out, you have, I don't know, you ended up with some, you had to get an operation in that time, so that operation left something, some vein
Or you're a smoker.
clogged, or you're smoking, or I mean, the list goes on, and with all those things, there's factors. Your cholesterol, if your cholesterol is too high,
smoothies.
yeah, exactly. So I mean, that's what happens if you get it at a later age. So even for the term and the whole life, get them at the younger age you get them, the lower the premiums will be. The difference between the term and the whole life is term is a price for a certain amount of time. It could be 10, it could be 20, it could be 30 years. The whole life, the price stays the same. With that means that the price it's going to be higher for the whole life. So if you're looking for a lot of coverage for a low price, you go for the term. If you're looking for a decent amount of coverage, but you want to make sure that price doesn't change on you and it stays forever until you need it, and you want to accumulate funds as well, then you want to look into the whole life side and see what options there are. Winmore offers both options, and there are also other within the term or the whole life that are sub options that we offer as well. So if you have any questions on it, please leave a comment. If you've been in this situation, let us know. Don't get it too late. I have a few instances where individuals, unfortunately, have purchased the insurance too late. I've been in a situation where someone was purchasing it for their father, who was at an elderly age. He was already in a home, and they thought about it a little too late. By the time they purchased the policy, I would say anywhere between 4 to 6 months into the policy, their father passed away, and it was actually because of the cold. He was outside, and he wasn't able to breathe. One thing led to another. He passed away, and they called about the life insurance policy. The thing about the policy is it only protected for a death benefit, basically, of $10,000, which is the lowest that you can get. And it's a final expense policy. That's what they call it.
Would that cover the casket?
I mean, maybe. Maybe. I think it could be burials could be anywhere between $10,000 to $15,000 minimum. I think just to arrange it. So I don't know if the casket. I don't know if that could include the casket. Because I'm sure that's an additional cost. So something to think about is these final expense policies. They're technically whole life policies. But what ends up happening is there's a lot of rules to them. So they weren't able to get the death benefit because the policy didn't last a full year like it's supposed to. And this only applies to these final expense policies. So don't wait to get a final expense policy.